Welcome back, and of course you guys are tuned into the 30 days of Navy Federal, and today I'm talking about, I think, my favorite Navy Federal product, and that is the shared secured loan, the pledge loan, the savings secured loan, whatever you want to call it. The savings secured loan, it is the loan that's on the screen. So basically, this savings secured loan, what is it? Why do I love it so much? Why do I think it's such a great product? Okay, so here's what it is. I'm going to give you guys the lowdown. So the savings secured loan is a loan that allows you, with a minimum of $250, to begin to change your life, to rehab, rebuild your credit, build your credit, create this monster credit profile. All right, so how does it work? With a minimum of $250 in 6 months, you can actually get one of these loans. Now, how much is this going to cost you? In interest, 2 to 3%. Typically, they're about 2.25%. For these secured loans. However, someone's going to say, well, 2% on $250, oh, that's like $5 that I have to spend to repair my credit. If you know anything about building your credit or rebuilding your credit, you know that $5 is not a huge cost. But I'm going to actually teach you how to cut that cost down even lower. Okay, hold up. What? Remember, there is always a way to make something great better. So this Navy Federal Shared Secured Loan, for less than $5, you can actually put a positive reporting trade line on your credit report. Okay, you just have to have initial collateral to begin this process. So I'm going to teach you guys how to do this right now, and I'm going to show you guys the greatness of this and what you all can do to use these strategies and techniques to build your credit profile or rebuild your credit profile. So you get this savings secured loan, okay? And with the savings secured loan, you're going to put down a deposit to open up a loan as your collateral. So, for instance, if I open up a $250 loan, this is when everybody, I'm telling you guys, I'm going to talk slow. So for those of you who are going to say, oh, we got to speed up the video because he's talking too slow. Every time I do this video or something on this loan or this topic, I notice they get kind of misconstrued. So I want to talk slow and make sure that everybody understands it, okay? So we're going to do this loan, open it up. We're going to give Navy Federal $250. Okay. Now, what they're going to do, remember to say secured loan. You're securing it with their own money. They're going to loan you $250. So they put that $250 instantly back in your bank account. You're going to sign a promissory note. You can either do it at the bank. You can do it in your mobile app, or online in the portal, or you can have them mail you out a promissory note. The easiest way is just to sign into your online banking, click the e-promissory note, boom, instantly. You give them the $250, they instantly put it back in your account. Now here's what you do. Send them back a lump sum of that money immediately. So send them back $200. So now the balance on your loan is $50, which is only going to be a very small percentage of your loan. It's going to keep your debt to income ratio low. But what happens, this is where a lot of people freak out too. This is the part that you have to pay attention. Now, you gave them the $250. They gave it back to you. You gave them the $200, and now you just have to wait up to 72 hours. It usually takes between 24 and 48 hours, between 1 and 2 days. At the most, it'll take 3 days. They put that money back in your account. So now you just wait until the end of your loan. And that last month that your loan is open, go and pay your loan completely off. And now every month you know that your debt to income ratio is low, as well as you have a positive payment reporting month after month after month. Now, of course, if you do this with the minimum $250, it'll give you 6 positive payments. However, there is still the option out there on the table for you to do this with larger amounts of money. You can do this with $20,000. You can do this with $30,000. You can do this with $10,000. The maximum loan term is 60 months for anything under $25,000. However, that starts at $4,000. So just with $4,000, you can have 5 years of positive payments on your credit report. However, remember, you're not really spending the $4,000 because they're going to give it right back to you. So you're just putting it up as collateral, and you're going to pay the 2% interest on however much you leave on your loan. But make sure that you leave a little bit of money on your loan so that it doesn't get paid all the way off completely. You don't want to completely pay this loan off. You want to pay it down a lot so it's not affecting your debt to income ratio. You get your money back, and then at the end of the loan, you want to pay it completely off, so that way you get all of those positive payments every single month. Now, with that being said, you guys, I just have to thank you all for tuning in, and thank you all for watching and listening. I want to make sure that everybody understands this method, because this is a great method. It works with certain other credit unions, but again, it's trial and error unless you ask that credit union specifically if they're going to release those funds back to you. And if you find a credit union that does this other than Navy Federal Credit Union, please leave it down in the comments and be a part of the family. Help us out, help us grow, and of course we're going to keep bringing you guys great content and great knowledge. And as always, thank you all for watching, and peace out.